And meanwhile, diversified industrial company Kap International has reported a 10% rise in annual headline earnings per share to 24.2 cents, driven by the acquisition of Steinhoff's industrial and logistics assets during the period. Revenue was up 24% to 11 billion rand, with a strong performance from its logistics and manufacturing units. The group's operating margin fell to 10% due to pressures experienced at PG Bison. A dividend of 6 cents per share was declared. I caught up with the CEO, Joe Javier, for more on the numbers. Let's take a look.
It's a complicated deal from an accounting perspective, because you have only 3 months of Kap and 12 months of Unitrans, of the old Unitrans assets. And, you know, logically one thinks that it's been a bit of a reverse takeover, so you have to look at it as a new listing almost. The advantage of that is that we've had little or no implementation risk, because we've known the businesses for a long time. We've been in touch with and managed the people for a long time. We've invested in the Kap business, I think, since 2005. So the implementation of the deal has been really easy and without any hiccups at all.
Let's start off with the largest contributor to earnings, the logistics side of the business, making 6.8 billion in revenue and driving profits up to 701 million rand. So talk to us about how this division has performed during the period, and you also mentioned new contracts that have been awarded. Are these substantial, going to increase earnings in the future?
Yeah, the Unitrans logistics business is an interesting model, to say the least. It's a model that's been around for a long, long time. It's long-term contractual annuity-style income streams. We don't just have a fleet of vehicles that we try and keep busy. We engage with customers on a long-term contractual basis, where we re-engineer their supply chains. We've been working for some customers for 40 years, other customers for 50 years. So it's really a sustainable business, and it's had a very, very good year. We've had a number of renewals, contract renewals. We've got some substantial contracts which we are busy putting to bed as I speak. So all in all, yeah, it's been a great year for the logistics business.
Where's the area that you see you could grow this part of the business the most?
Interestingly enough, we think there are major opportunities in the rest of Africa. We have, as a business, been operating in other parts of Africa for 18 years. We've paid the school fees. It's not easy to operate in Africa. You need to know what your limitations are. We've been there for a long time, and we're confident that there's a lot of supply chain initiatives that we could add a lot of value to in Africa. So we're very confident of that.
Does that require substantial amounts of capex from your side?
Yeah, the business generally is capex hungry, because we put, if we win a contract, we put all the equipment in. And that might vary from laser leveling in a cane field to, canal maintenance up in Africa. It might be a fleet of trucks or a fleet of yellow equipment in a mining operation. I mean, there are various interpretations of where we play in the supply chain. So it's quite a capital-intensive business, but the capital is subjected to a 5-year contract minimum, and we recoup that capital over the period of the contract.
So do you have contracts that you're working on currently in Africa? What parts of Africa?
Oh, very much so. We're a fairly big player in Mozambique. We're in Malawi, Tanzania. We're in Zambia, not in Zimbabwe just yet. The jury's still out on that one. But the opportunities in other parts of Africa, especially up the east coast, are really encouraging. We see lots of opportunity there. Tanzania, we think it's very politically stable, and we think there's some really good opportunities in Tanzania.
When we're talking about the Unitrans passenger business, you mentioned that you were able to meet targets, yet you experienced challenges, strike action by some of your employees.
Yeah.
Just run us through how you're operating in light of these labour issues.
Yeah, we run in the passenger division. It's a number of different businesses, in the sense that it's tourism, which is the mega coach, mega bus business, then the contractual transport on the mines and other places where we take workers from their homes to where they work. And then we also operate the Gautrain bus contract, where we had some really difficult labour issues, which hopefully are now settled, and we moved on. But that business is also benefiting as a result of the supply chain solutions business moving into Africa. the passenger business is winning contracts on the back of that supply chain solutions business. Because if we do, for instance, a contract up in Mozambique, there's always people transport needed, and so we go up with a total solution for our customer.
So you're confident that going into next year, what could we see earnings increasing? I mean, as you say, you're looking to become the leader in flatboards.
Yes.
Tell us about the restructuring and how this is going to contribute to earnings growth.
Well, what we've done is we've taken an enormous amount of overhead out, and we've got rid of a whole branch network. We deliver product now directly to the customer from our factories at the lowest possible price, where we can make a reasonable margin. So yeah, we're very confident that this business is now geared to do a lot better in the year ahead. So,
of course, also on the manufacturing side, you have some of Steinhoff's companies that have been included, like Vitafoam. You've also got BCM. So just talk to us about, now that you've got this new manufacturing base with Steinhoff's assets, what the plan is going forward.
Yeah, we've got, let's talk about what we put into of our own businesses, Steinhoff businesses, which was really Vitafoam, Deslymatics rather, and BCM. Vitafoam's had a difficult year with foam. It's been tough volumes, and pricing has been under pressure. Deslymatics is a smallish business. Deslymatics is a smallish business. BCM has not done too badly. But the main businesses that we have acquired, if you like, through this reverse takeover, are Hosaf, which is the sole supplier of PET, which is polyethylene. I don't know if you know, it's the raw material for plastic bottles. We make all the plastic bottles, so it's the only manufacturer of its kind in the country. We think that's a business with lots of legs and lots of future. Then we have the Feltex business, which is the automotive business, makes seats and components for the automotive industry. There's lots of build programs, and the motor business is in good space right now, so we're very confident of that business.